Following the drop in the value of Tesla's EVs in China, there have been worries about Tesla's vehicle requests declining in this market. A few experts and financial backers have revealed their interests about the rising contest in the EV business and what this might be meaning for Tesla's pieces of the pie, and presently new information has shown that Tesla might be losing customer mind shares too. Hello folks, welcome back to All That Tesla Stock, as indicated by late information on new vehicle purpose eyes by Lagfolio. Tesla is by all accounts losing a portion of its clients to other EV producers. The information estimated purchaser mind share change, which is a proportion of shoppers' consciousness of a business or brand contrasted with its rivals. As such, it alludes to our image's perceivability and prevalence. It likewise decides how well shoppers have gotten an item. This information is subsequently a significant variable for makers, as it gives a reasonable view regarding how well their item is being gotten. The new information contrasted buyer mentality change from 2021 with 2022 demonstrated that Tesla lost around 5% of its buy plan volume from 57.7 in 2021 to 52 this year. This shows some kind of decrease in buyers' premium in Tesla vehicles, which could be a justification for financial backers to be worried about Tesla losing its piece of the pie offers to other EV organizations. We should figure it out, yet before we do, assuming you like this kind of satisfied, hit the like button, buy in, and turn on notices to move forward thinking on everything along on with Tesla. Tesla has had a few episodes of monetary troubles before, a large number of which have made financial backers become negative on the organization and its stock, with many in any event, foreseeing Chapter 11 of every 2008. Similarly, as Tesla was preparing to close a $100 million Series E, the worldwide economy crashed, sending automakers spiraling towards Chapter 11 before the year's over. Tragically, every one of the plans Tesla had for the $100 million financing round were purposeless. The automaker couldn't construct another production line or base camp, and furthermore needed to defer the Model S send-off and lay off almost a fourth of its staff. Tesla additionally confronted difficult situations from 2017 to 2019. As per Musk, Tesla was about a month from liquidation as it battled to increase creation of its Model 3 electric vehicle. Between these years, the Model 3 introduced an existential emergency for Tesla, causing the vehicle organization to go through a serious difficult time change that carried it really close to Chapter 11 by and by. At the point when asked how close Tesla was to Chapter 11 when it was carrying the Model 3 to large-scale manufacturing, Musk expressed that the nearest Tesla got was about a month, adding that the Model 3 slope was very upsetting and an extraordinary torment for quite a while regarding creation and coordinated factors. The Tesla model first moved off sequential construction systems in quite a while in July 2017, still distant from arriving at large-scale manufacturing, and by November of that year, examination was recommending that Tesla would require more subsidizing in 2019. Tesla was all the while delivering less than 63,000 of the Model 3. I probably needed to raise billions for the organization at an occasion, and through institutional financial backers, the vehicle organization had meant to work around 500,000 vehicles at its Vermont office among 2017 and this period. Tesla shares fell by approximately 38, and a few financial backers lost their positive assumptions for the stock. Notwithstanding, Tesla's stock costs soar in 2020, and in August of that year, Tesla stock was high to such an extent that the vehicle organization went on a 5-to-1 stock split. Tesla had divided its stock 5 different ways, so every individual offer was worth just a fifth of what it had been. Nevertheless, financial backers got multiple times the quantity of offers before that singular offers were selling for more than $2,000. Thus, the split permitted more modest financial backers to purchase a piece of the organization. In December 2020, Tesla joined the S&P 500 with a valuation of more than $600 billion, making it Wall-Road's 6th biggest organization by market capitalization. While it was guessed that the pandemic in China would influence the efficiency of Tesla's Shanghai plant, the organization's result again arrived at right around 185,000 vehicles. In the initial 2/4 of 2020, as of now, financial backers had started stacking up more Tesla shares anyway, while certain financial backers were placing in cash in view of Tesla's true capacity for benefit. Later on, some others just purchased because of a paranoid fear of passing up the quickest developing stock. Tesla kept inclining up creation across it to various production lines worldwide, and in June this year, in excess of 242,000 Model 3 and Model Ys were delivered by Tesla's office in Texas, and 16411 Model S and X vehicles were likewise made. The automaker's latest quarterly vehicle creation volume came to this 365,900 units, and its creation level in Q3 expanded by over 41.5% quarter-on-quarter and developed by roughly 53.9% year-on-year anyway. While everything is by all accounts looking really great for the vehicle organization as far as its market basics, this has neglected to reflect in the stock cost, which has been on a descending pattern for a long time following this consistent drop in stock worth. A few financial backers have wound up selling their portions, as it's as of now not beneficial for them to put resources into, and these are significantly financial backers who had purchased shares as it was going up the outlines. They were money management genuinely as opposed to legitimately. Thus it very well may be quite challenging to stay hopeful when the stock cost is continually stinking in spite of the fact that Tesla stock is as of now preparing for short of what it's truly worth, and buyer mind offer may truly be diminishing. It doesn't change the way that the automaker is making great creation figures and has an appeal for its vehicles. In 2021, Tesla Model 3 was Europe's top-selling electric vehicle, surpassing the Renault Zoe and other famous models in that locale like the Fiat, Tiguan, and Peugeot 3008 SUVs. In like manner this year, Tesla's Model A best new vehicle enlistments in Europe. As per statistical surveying information, the status showed that the Tesla SUV is quick turning into a vehicle of distinction in that district. The main considerations that might be burdening Tesla's interest are conceivably the expanded hang-tight times for its vehicles, as well as the climbing vehicle costs throughout the years. While one of Tesla's fundamental targets is to make its electric vehicles more reasonable, the vehicle organization has been compelled to raise costs, and this is affecting Tesla's vehicle interest, albeit not an extremely critical rate. Additionally, sit-tight times for Tesla vehicles had expanded. The Model X actually has standby seasons of as long as 11 months. The interest for these vehicles has been developing, and the automaker has had issues staying aware of the interest for its provisions, which has been deteriorated by issues with expansion. Store network factors like standby times might be making Tesla record a lesser level of its customer purpose volume this year, and by zeroing in on lessening standby times and bringing down vehicle costs, Tesla can get much higher pieces of the pie later on. The automaker previously uncovered that it had cut the conveyance holding up season of all Model 3 and Model Y vehicles to at least multi-week, as per famous business visionary and prime supporter Landon Swan. Tesla is quick to market in the EV business in a genuine way and has the most conspicuous name and brand mindfulness that no other person has. He likewise accepts that Tesla has enormous tailwinds, for example, gas costs and expanded revenue in EVs, which isn't disappearing at any point in the near future. In spite of the fact that Swan sees Tesla is a main organization with a great deal of possibilities, he really does anyway take note of that the vehicle organization has a ton of rivalry coming after it, and this is as a matter of fact valid throughout recent years. A few EV organizations have tracked down their direction into the business and are slowly taking a portion of Tesla's pieces of the pie anyway. This isn't such a great deal an issue for Tesla balls, since it will take a ton to surpass the vehicle organization from its situation as the top driving EV cosmetics. Tesla has arrived at an elevated degree of outcome in the television business, and it could never have arrived at this point with next to no smart courses of action to direct the organization through its haziest times. Elon Musk merits such a lot of recognition for Tesla's prosperity, while the chief of Tesla presently has a ton on his plate in light of this new Twitter business. He is as yet a pivotal piece of Tesla and gains a great deal of esteem for the automaker's prosperity, most likely going after valuable open doors, hearing less of chance and diving carelessly into high-risk business choices might have driven the organization to Chapter 11 previously, yet it has inarguably been a piece of its prosperity. Is Tesla really losing its pieces of the pie to other EV organizations? Tell us down beneath, and remember to let us know your valuation of Tesla. To find out about what Tesla's been doing throughout the course of recent days, feel free to tap on this next video on your screen. See you there.